What's going on? It's DADA FX. Welcome to my channel. This is actually my first video. It's January 12th, 2021. It's about to be 5 o'clock. What I'm going to be doing today is just giving you a weekly analysis on EURUSD. I'm actually trading for a prop firm called Audacity Capital. So what I'm going to be doing is just posting my trades and kind of my forecast of what I think is going to happen in the market. Take it with a grain of salt. But along with this, I'm going to definitely be dropping some gems. So pay attention. I'm going to make this short and concise. So let's go. Basically, what we have here is EURUSD on a monthly chart. And what I'm going to start off doing is I'm going to find some key levels. Now, bear with me. I know key levels could be actually whole numbers, some will say. These aren't going to be perfect, but just for the sake of the video and just getting right to it, let's do it. So what I like to do first is I switch my chart to a line chart just so I could visually see where I find support and resistance. And that's kind of what I consider a key level, areas where price finds support and resistance. So right now you can see I have an alert set up. It's kind of exactly where one of these key levels is. Let's just mark that one off so that's out the way. So as you can see, boom, right here, right here, right here, and right here. So we kind of want to look in this area more or less because we're looking at recent price. But yeah, I'm going to put a monthly key level right there. Now, I do see another one right here in this area. Yeah, I see one right there. Right in that area. And I also see one right here in this area. So if you're wondering why I see these, is because starting at the one at the very top, I see a gap right here. I see resistance right here, resistance right here, resistance right here, which is almost an overlap. Support, support. I would say that is a overlap, and price is kind of meeting right here, right now, in this area. The second one, I see resistance right here, resistance right here, support, an overlap of support right here, resistance, resistance. Right here, at the very last one at the bottom, I see support, support, resistance, overlap of resistance, overlap of resistance, overlap of resistance, and that's it for right there. So I'm gonna break it down and go to a weekly, see if I see anything else. Which I do, kind of in this area right here. So I'm gonna clone it. Okay, maybe that didn't work. Or it did. That was a little confusing. This is a weekly key level. I think it's pretty self-explanatory where I find that at. I really want to mainly focus on where price is right now. You don't want to just be overkill with it, you know. Okay. I'm gonna go back to this monthly because I kind of see like something going on here where it's just like confusing. All right, yeah, it was just a clone that I made. But yeah. All right, so going to the daily. I'm gonna keep it short and sweet with those key levels. I think this is enough. Now, next, what I'm gonna do is I'm gonna go back to the monthly. All right, and I'm gonna make some trend lines. So I'm gonna switch back to my candlesticks, and I'm gonna kind of just assess where price is at and what's going on. So what I like to do is focus on market structure and the most recent market structure. So what I see here, I'm gonna kind of just point it out with text, and that is see a high, I see a lower high, and another lower high, another lower high, another lower high, and so on as far as the lower lows. Got the lower low here, lower low. This is kind of an equal low, so we'll just keep that in mind. That's just an equal low, lower low, and lower low. So now we have, and I'll just put this as an equal. This is an equal low. And just for the sake of the video, that's more of a equal low as well. So right now I don't necessarily see structure being broken. You could say that right here, market structure, you could say market structure right here at this lower low, it failed to create another lower low, and it created an equal low right here. And also it broke this lower high and created a higher high, which we could say, let's just say that's a higher high, right? But right now we don't know if it's creating another higher high. Honestly, in my opinion, what I want to show you is this. In my opinion, I believe that the market is moving sideways right now. It's moving in a range of support and resistance. And to kind of just better show you, this is kind of like what I see right here. I just see kind of like a range right now where price could break out either side. And if you want to be technical, because I'm going to be honest with you, my overall bias for this is it's going to be going to the downside, but I know a lot of people are going to say that this is not going to the downside. And I will explain why right now. So most people would say that, boom, price is breaking out and perfectly resisting or finding support at this trend line, and it's starting to break structure. That very well could be what's going on. For me, I don't think so because, as I said previously, I find that price is at a monthly key level, which is a strong key level. And this is just on a monthly. So, what I'm going to do is I'm going to delete these markings. Hopefully, you guys, do this when you trade just to visually see what's going on and to just analyze market structure because that's like one of the most important things when trading. So, yeah, you can see that right now it's kind of breaking out of this trend line, right? This downtrend. And it's finding some support right perfectly on top of this trend line. But we see that it's wicking right at that major key level or monthly key level. So breaking it down, going on to the weekly, we see that there is a strong bullish momentum. It's in an uptrend, no doubt. It's no doubt that it's not in an uptrend. I mean, there's no doubt that this is in an uptrend right now. But I do find exhaustion. I do see exhaustion. I see this wick right here. And I also see an institutional candlestick, which I'm going to show you right now. And these are some goodies that are going to be in my course. But what I like to do is I like to look to the left and look for where there's obviously, a supply zone right there. And it's a major sell-off, right? And usually what you want to do is the opposite candle previous to this major sell-off would be the institutional candlestick. And you want to kind of make a mark right where the opening of that candlestick is. So just to show you, boom. It would be this green candle right here, right? And now it would be right there. You could kind of see where it wicked right there. So in my head, there's no doubt. And my bad. It's actually still perfectly lined up, but you could kind of see where I meant to do it right here. This green candlestick right here, where my crosshair is at. The opening of that candlestick, you could kind of see where that key level, that institutional candlestick is showing some confluence here where price now wicked at on a weekly. So that wick is a weekly candlestick, so that's strong. So now breaking this down on a daily, you kind of start to see more in detail what's going on. You could very well say that this is a retracement, and it could still be going higher. And yeah, it could very well still be going higher. Like I said, mind you, this red box is a big range on a monthly, at least how I perceive it. So what I'm seeing here is I do see still an uptrend, right? I see that you could say that even putting a trend line right here, it's breaking that trend line. So getting back into what I'm talking about, what I'm going to show you is this. Yes, it's in an uptrend, but I believe that it's going to be reversing. And it's going to be showing some downside momentum very soon. Today is January 12th, 2021, and it's 5 o'clock p.m. Eastern Time. So I'm going to go to a 4-hour, and I'm going to show you what I mean by this. Now, I'm going to delete this range just so it's not like bothering anybody. And I'm going to show you what I mean. On a 4-hour, which is still a strong time frame, I'm going to put a simple trend line, okay? Simple trend line. Bear with me if I'm going through the wicks. I know that, some people frown upon that, whatever. So what? What I want to show you is this. A break of structure, right? We see a break of structure on a 4-hour. A break structure right there. Now, usually with these breaks of structure, personally, I play a 50% retracement. Depending on where you set your swing high and swing low will determine if you accurately, get that outcome. But I'll show you an example, and I'll show you two different methods. So, what just happened? Okay, so, yeah. With this retracement, we could be starting, some will say start right here and come down. And just to make this a little thicker, because we got some different lines going on. The 50%, you can see where the 50% is and where it lines up very well with, obviously that's where I have my alert, because that's where I want to kind of make my my sell. But you can see where price could basically possibly, start selling off again after it makes this correction. Now, some people will say, start to swing high and swing low right here. That just gives you more confluence of it being in that golden zone, which would be this zone right here. Right? So this zone is kind of where I'm looking to make a sell. That's kind of where I want to look for a sell. Right now, I have obviously my confirmation of a break of structure. I see that it created a lower high on the 4 hour. It had a high, then it had a lower high, and it made a low. And hopefully this is a lower high and then creates a lower low somewhere around here, or even maybe here in these areas on the fib. Now, something I really want to point out is this. Price could go either way, right? It could very well just start shooting up, and this could be a retracement actually to the upside, and I could be doing this all wrong. But I personally feel like this is going to start going to the downside. And that's why I'm kind of more or less doing these videos for a journal for myself, because I really don't like screenshotting and writing these journals down. I can kind of refer back to what I'm doing with these trades. So, yeah, this is why I'm doing this mainly, to be honest. And I will be doing a course on the stuff that I've learned anyway, just based on trade and market structure, utilizing certain indicators as confirmations, understanding key levels, risk management, things of that nature. But yeah, coming back to this right here, you can also look at that 50% in this area right here and still see a lot of rejection. But it also could be in this area right here where it lines up with this monthly key level. So breaking it down on a 1 hour, you can kind of see where there was a big bullish momentum going on here. Just all bullish action right here. And it's starting to, there's a doji right here. You can kind of see right at this area where we just set our golden zone or red zone per se, since it's red. But you can see that I'm waiting for this pullback where it previously rejected or found support, and it found support again here. It found resistance here. It wicked here. This is just an area where price has just reacted a lot, and it's kind of what I'm waiting on. And price has also reacted here too. Let me show you right here. This 50%. Boom, right in this area. That's why I have an alert there, just in case price kind of shoots past this 38.2. It's 38.2 level. Now, just to be technical, what I'm going to do is, because I know a lot of people are going to be like, I'm doing this quote-unquote wrong, I'm going to set the swing high and swing low this way. So where it's right at the breaker structure, where it wicked at, and, you know, we'll just say that the 50% price is already right now at that 50% right here. And hopefully in this area, we see some, at least for me, for all the bears out there, we see some kind of consolidation and a break toward the downside. So overall, that's pretty much it on a 1 hour. Now I'm going to pull out some different indicators that I use to kind of see if we find any confirmation. So one is my smooth moving average. Two is another moving average, the 50, which obviously I see across. Now usually what I'll wait for with these kind of things is for price to be under both of these moving averages, which is one. Then two, for these moving averages to be crossing, which would be right here. And then for a cross with the MACD, similar to like right here, where it crosses from the top and then goes down. And then I would look for price to be kind of in this oversold area on the RSI, and then coming back down in here where I would take a sell somewhere in this area. So that's a few confirmations I'll wait for to start anticipating my my short and to begin my short on a smaller time frame. Now, using these indicators, you could find plenty of videos online on that as far as like why you would want to do that. You know, if you're trying to do a short, you obviously want price to be under these EMAs, and want to see, you know, the MACD cross at the overbought area, and you would want to see the RSI in the overbought area coming back into this purple zone, right? So now also I use Ichimoku Kinko Hyo, which in my course is going to also be available. What I find very interesting with that is price is literally at the top of Senko span B, if I'm correct. Off the top of my head, I got a lot on my mind, but you know, the Ichimoku Kinko Hyo, the Kumo, or these clouds you see, is really just two lines, and it's filled in with a color. So kind of the outline of this cloud is two lines. They're actually two, in a way, moving averages. Correct me if I'm wrong. And they're projected forward. So it's really just price projected forward X amount of days. I believe it's 56. I might be wrong. But yeah, you could kind of see where it's like basically price moved forward, and imagine it just being two lines, kind of just to show you. Boom, like this line, then there's this line, and it's filled in with a color, okay? So usually if price breaks out this Kumo, it's a confirmation that it could be a reversal, right? Now, if price finds perfect rejection right here, you can kind of look at it as a deep retracement per se to take a nice short, and it's going to be coming back down. Now, there's a lot of variables with that. You know, you want to be looking at your Tekken Sen and Kijin Sen, which are these blue lines, the blue line and red line. Preferably, you want these pointing down if you're taking a short, and you want this Senko span to be pointing down, and you want this Senko span to be flat like this. That's the ideal setup for Ichimoku Kinko Hyo. I used to just trade this strictly, you know, no market structure, nothing, just trading this indicator, and I was making money. So you can do it if you want, but I wouldn't suggest it. It's more or less long-term trading with that kind of stuff if you want to try that out. I know it's a lot of people out there that use it. There's one guy, his name is Trader KEI. This dude's a master when it comes to this Ichimoku Kinko Hyo. So check him out. Also check out that dude Jackpot PMG or something like that. These are people I actually like learn from watching these videos, and I learned a lot from. So anyway, back to what I'm saying. Right now, I'm really just waiting for a short. Now, to kind of explain to you what I'm doing, right now would be honestly a good time to set up a short. So I'll break it down on, say, a 15-minute to see where price is at, and to see where I'm at, see if price is consolidating, kind of just wicking at the area. And that's what I see. That's what I see. So an example of a very good risk to reward setup would be on a 15 to obviously see price come down a little bit. Just because it's wicking at this area doesn't mean it can't just still shoot up. It's just, it's 5 o'clock. It's the end of the New York session. It's kind of a downtime right now. But, this is what I would do. I'll set up a short, say like right here at the 50%. I'll take it down to the previous low, which is 71 pips, and cut this down to above market structure, which would be, if you're following my crosshair, I know it's a lot going on right now, this area right here. What I'm going to do is I'm going to take the Ichimoku off because it can get confusing. And I'm going to hide this fib. So this would be an example of a very good trade if you're risking 1%. You're risking 20 pips to make 71 pips. Now, if you want to break it down even on a smaller time frame, you can go on a 5-minute, right? Now, you could wait for when the Asian session comes in. Maybe the Asian session might, push Euro USD a little higher, right? And it could come up to this area. Let me show you. Go back to my object tree. Show this fib retracement. Go back to the 1 hour, right? Let's just say that, price comes down. Price comes up to like the 60% or some area like right here, and you want to take a trade there, you can. Obviously, it's a deeper retracement, if you get what I'm saying. So the deeper the retracement on a break of structure like this is obviously ideal. So you can go ahead and do that. For me, I necessarily don't know if I'm going to wait. I kind of see prices reacting already right now as I speak. So I might wait for this hourly to close. Or I might wait for the 15-minute to close and see where price is at. You kind of see literally right now where price is going as I'm doing this. So, yeah, that's pretty much it for my weekly analysis with Euro USD. I'm trying to keep it short and concise. I know I got a boring voice, but yeah. You could see on the 15-minute if you wanted to do this, as I was saying, a perfect example, which I like to wait for the 1 hour to do this because it's a stronger time frame. But boom, the RSI was outside. I'm waiting for it to come back in, like as it's doing now. And MACD is crossing. Also, price is under this 200 EMA. And although it's not under the 50 EMA, it's still a good confirmation to take a trade if you wanted to. It's obvious that there was a lot of bullish momentum and it just can't just keep going up. So you could take that trade, but for me, I'm not going to take it just yet. I'm still waiting. I wait for this 1 hour, to be honest, to kind of like show me something. I want to see the MACD cross on that. And I'll kind of show you an example of why. So like right here, let's see what happened right here. Right here you can see where the MACD crossed, right? You can see that the RSI was coming back in. Now it didn't come out of here, but it still, was shooting back down from where it was a little overbought in this area. Start coming back down. The cross happened, right? And you can see price started to come down, and boom, came right back up. Now, yeah, you would have been in a little bit of drawdown, probably not any, because you would have started right here, or let's just say after the close. That would have been this candle. So yeah, you would have been in some drawdown, and then you would have started catching that sell. You get what I'm saying? Another thing is you want to pay attention to that. Obviously, you see things sooner when you're on these short time frames. So like, for instance, right here, like as I said, you would have caught that drawdown if you were right here. You could see right here, boom, price was outside, right? It start coming in. Okay, sorry about that. I got interrupted by a call. But as I was saying, if you was right here and you seen price, look at my crosshair right here, RSI started to come back in, right? That's when you take that short, right? If you were to, play that setup, playing basically, the resistance right here, blah, blah, blah. You would take this, the sell right here. You would see that, MACD crossed. Boom, you would catch this. Now say, you didn't want to just take this, I don't know, like say, boom. You didn't want to just take the 71 pips, right? Say you didn't want to take that. And you let it come back up. Boom. You still would have caught all this, and you could have just basically let it fly. You could have basically let it fly till it came out the RSI and came back in right here, right? Because that's usually what people do when they play this. They just, wait. They'll take it. They'll take the trade when they'll look to take the trade when it's coming out of the RSI right here. And then when it comes back in out of that overbought area, they'll actually take the trade. Then they'll hold the trade till it breaks out the opposite way and then comes back in. So you can see right here, it did that. You could have took that 71 pips, or you could have just let it ride. It still wouldn't have hit your stop loss, and you would have been in the money this whole time on the downtrend of Euro USD before the break of structure even happened right in this area, if you're looking at my crosshair. So it's a lot of ways to play this. I'm just showing you like kind of like my analysis on things. So yeah, like right now, if you wanted to, you could be taking this. RSI is obviously in the overbought area, so it's starting to cross. I might take it. I might just take it. And I'm thinking that, risking 20 pips on a $15,000 account. I trade for Audacity Capital. I can't lose a certain amount. I might just risk, like 1%, which honestly I can't even risk 1% on Audacity Capital because they only let you trade a 0.5 lot. They only let you trade a 0.5 or a $5 lot max at once. So let's just say on a position size calculator, you got $500, right? You're risking 1%, and you're risking, how many pips was this? It's 20.6 pips, right? You're risking 20 pips to make 71 pips. let's just say 21 pips. You're gonna be basically doing a 20 cent lot. 20 cent, 20 cent times 70 pips is $14, which doesn't seem like much, but if you're doing 10 cycle trades or 10 trade cycle, as I like to call it, you're literally doing like this. Say you're only taking trades that have a high risk to reward ratio, or at least a 1-to-3, right? You're risking $5 to make that $15, right? So let's just go over here and I can show you real quick. Say, you got 10 trades, 1 trade, 2 trade, 3, 4, 5, 6, 7, 8, 9, 10. Now you're only risking 1%. So the max you could lose is 1%. So say, you lose 1% on your first trade. You win 3% on your second. Lose 1 on your third. Lose another on your fourth. Lose another on your fifth. Win 1% on your sixth. Win another 1% on your seventh. Win another 1% on your eighth. Win 3% on your ninth. And then lose 1% on your 10th. You're losing a total of, 5%? And you're gaining 9%. So 9 minus 5 is you winning 4% on that day. And 4% on a $500 account would be what? If $5 is 1%, you're winning what? $20 on that account. You're winning 4% on that account. Now, as I said, it might not seem like a lot, but that's going to add to your lots now. Now you can add that to your lot size. You could literally add that $20, and now you have a slightly more, you have more to play with on your lots and to earn more. You get what I'm saying? And if you scale like this and you do it every time, you're going to see progression. You know what I'm saying? The key isn't to just go crazy and try to make these crazy profits. Like you see these people online, I made 20,000 in a day, this and that. I mean, you could do it once you get there, but you're going to blow your account if you try and do it with $500. Or unless you are certain on a certain trade, like for instance, Bitcoin. Everybody knew Bitcoin, or at least I knew Bitcoin just had a crazy bull run to 40K, right? There's no doubt that it was going to come down, right? There's no doubt that it was going to come down. Like, I'm $10,000 I'm $10,000 in profit on this FTMO account just off of Bitcoin and SPX, because I knew what was going on. I seen that I didn't even have to really do any trade setup, because I knew that, I knew what was going to happen. You get what I'm saying? And yeah, this is the FTMO demo that I was trading. And I also have this Audacity. I have this Audacity account, this Hermes Market, whatever account. I have this account that I'm trading right now. And you kind of see I have a sell limit for EURUSD already, what I had set up. But yeah, you can see how things is going. I just started this account, so I'm $112 in profit so far. And I'm going to keep this journey going with y'all so y'all can see my progression in regards to like trading the prop firms. And I can get into that later on if you want me to. But overall, this is just kind of a journal of my first few trades that I'm going to be doing. And this is just Euro USD and how I see it playing out. We're going to check on this tomorrow and see how things go. All right. So stay tuned. I hope you learned something from this. And I will be having a course coming out soon. So just stick with me. I hope you enjoyed the videos. And yeah, I'll see you next time. All right. All right, guys. So this is an update on the trade we took for Euro USD yesterday, January 12th, 2021, around 5 o'clock Eastern Time. It's now January 13th, 12:20 p.m. Eastern Time. And it looks like we just hit our profit target. It broke through our institutional candlestick, which was initially where I was going to take profit. But I want to see if, you know, this 1 hour candle holds up and breaks through that support. And I want to see obviously a continuation to the downside. If so, I may just hold this trade. But overall, you know, basically we accomplished what we were trying to do. So for anybody that took this trade with me, it'd be ideal to just, you know, close. Basically, it was a 1 to 3 risk to reward trade, which isn't bad. And that's pretty much it. So stay tuned for the next trades that we got going on. All right.